Augustine, and today we have a very special show for you guys. You know, we do it every Wednesday at 8 p.m. We're covering the market stats, we're covering the relevant news, and we're going over any questions that you guys have. And I know one of the main questions that you guys have been asking me is what is going on with rates. So today I brought my buddy here, Kane. He's from PacRes Mortgage. I'll go ahead and put up his Instagram handle below. So if you want to follow him on Instagram, get more information about rates, mortgages, that's going to be your place to go. But yeah, Kane, go ahead and introduce yourself to the people.
Yeah.
And
my name's Kane Robbins. I've been in the mortgage industry for 10 years. So I feel like a lot of my adult life. So I love it. And I'm just here to help, especially really show the significance of how good of a time we really are in. I know there's a lot of scare stuff out there, but I'm kind of here to hopefully make you feel a little bit better tonight.
Yeah, and it's funny because the main thing that a lot of people are saying, and I'm sure Kane and I, we hear it a lot, obviously, is that the market's going to crash. Rates are going to drive the market. We're in a bubble. All these things we're looking to address today on the live stream. So if you're looking for information like that, make sure you tune in for the entirety of the show. Just so we can start off here, I'm going to do the market overview real quick, and then Kane's going to add on a little bit of spice. Okay. So I'm going to share my screen here, and we're going to talk about rates, but we're also going to talk about, the market right now, what's going on here today, and why is it important to look at these stats, right? So guys, I'm using Sun Stats here. It's all the data from all the realtors across the entire state of Florida. You have Florida months of inventory. So I know that sounds a little confusing, but just think of that about like kind of your supply demand measure. So if we were to stop putting homes on the market today, we would run out of homes in 2.5 months to sell. So as you're seeing here, we've definitely had an increase in supply, almost double in these past couple months. And that is also with the rise of interest rates. So you can see that has changed significantly over these past couple months, but people are wondering, is it a good time to buy? Is it a good time to sell? Is the market going to crash? Guys, back in 2019, let's take a look here. We had 4.2 months of inventory. So we're still a significant amount of way from a balanced market. And keep in mind, at this point here, we're technically still in a seller's market. So at 4.1 inventory, really where'd you get to 4.5, 5 months of inventory is where you start going into a balanced market. But this is still a seller's market here, guys. So over here, we are still in a seller's market, though there are still a whole bunch of opportunities for you as a buyer. Now let's just check St. Augustine real quick. So we'll switch over to St. Johns County, not St. Augustine exactly, but it's going to follow along the same lines, right? So let's look at June of 2019, 4.7. Going down, we're September, October, 4.4, and now we're at 2.7. So we still have about 2 months of inventory to go until we're back into that balanced market, kind of a seller's market, but more of a balanced market over here. So I'm going to let Kane take the reins here because he's got a report over here, which is from a different resource. It's not from the same resource. We're giving you different information, guys. So go ahead, Kane. Let me know what you think here.
So to piggyback exactly off of what he just said in regards to the housing having a surplus or not a surplus. So if we look at what's actually needed in the St. Augustine market, the actual homes being built, it's about 7,232, but we are still underbuilding. And in this market and nationally, we've underbuilt significantly for the last 10 years. I mean, since the crash, builders held back on building because they couldn't. So we've still underbuilt. And that's the thing I want to touch on with a bubble. Bubbles are caused when you have oversupply. We're still pretty well below 2019, even after the crazy low rates and people literally fighting with pitchforks over homes. And do I feel like this is going to burst? Absolutely not. This is a completely different scenario. And I think that for the folks that are in a position to buy right now, I know rates could deter you, could scare you, but I can assure you, if you thought the last 1.5 to 2 years was crazy on being able to, attain a property, this backlog that we're creating over these last 3 months, all those folks that lost their bids that were under 90,000 over ask and didn't cover their appraisal gap, they're still out there. They're still waiting, along with a lot of other millennials and first-time home buyers that, are either coming to different areas. When they all get off the couch at once again, that's when rates drop. And we've had lots of experts state that rates do have the intention of dropping. We had 2 great days today. Am I saying like, oh my gosh, it's going to happen now? No, but they've been saying Q4, Q1 of next year, we could see a shift. Yeah. And if that happens, we're going to be in a different ball game. So if you're sitting on the couch, might not be a good time to be sitting on it right now.
Yeah. And, we're going to take a look at a tale of 2 different buyers, right? The buyer in today's market versus the buyer a year ago, and how that looks and how that kind of breaks out into how much money's coming out of your pocket. What deal would you find better in that scenario? So that's going to come a little bit later here. I have a couple of questions for Kane, and I know you guys want to know these questions. So I'm going to start off with the biggest one, right? What is going on with rates? We've seen stuff go on in the past, right? We had a 180-day spike where it went like 2 or 3 percentage points, and now they just seem to keep creeping up. Can you just elaborate? Like, I'm a 6-year-old. Would you be able to tell me what's going on with rates?
Well, it's kind of like my dad. When I was a kid, I'd always crank up the pool heater to 100, thinking that it would get hotter so much faster and just improve everything so much quicker. All it really did was burn a ton of energy, cause a lot of stress on the heater, and we really didn't get to the goal any sooner. And that's kind of what happened with the Fed. They did these bigger spikes, and those adjustments that you make don't really pay dividends to a lot of things for months. I mean, it could be 6-7 months down the road, but it can also have some short-term losses on some things or adjustments to our industries and so forth. So a lot of the stating where the Fed's kind of admitted like, hey, we kind of don't understand inflation. That makes even more inconsistency. That we had a pipeline ordeal with Russia. All these things get mixed into a pot, which have caused a very substantial spike quickly in how mortgage bonds are acting. So that definitely correlates into what's going on right now. I think that anything that the Fed did do, we're going to start seeing the dividends from that here in the coming quarters. I'm going to lay it like that. I'm not going to say it's a year from now, but it sounded like it could be a quarter from now, maybe 2 quarters, where we really start to get back to a little bit more, as we feel, normal. We've been living in this really low rate world, and I hear everyone's parents or grandparents have said, well, we used to be 13% interest rates and so forth. Do I feel like we're going to be into those levels? No. I think that we're going to start to see things kind of get back to normal in regards to that. And that's why I'm kind of stating what I said with my previous point. When that happens, don't be late to the dance.
So, I want to touch on something. You said we're going back to a normal market, right? And what we've had these past 2 years, not what you consider a normal market,
no,
right?
No.
So when you say we're going back to a normal market, is that code for a realtor and loan officer code that the housing bubble is going to crash? Or
no?
What are we saying?
So in regards to like my previous point, in order for something to crash, you have to have an oversupply, and we are way still undersupplied significantly. And it's not just in our Florida market. You can pull up anywhere across the country. Underbuilding has been going on significantly for a while. And I still feel like people will be fighting over pitchforks over homes if it wasn't such a substantially big change in rates quickly. Because that caused a lot of unrest. And what do you do when there's unrest? You sit and you're like, well, let's figure stuff out. Just kind of like Ricky Bobby's like, I'm just going to sit here and act tough until I figure this out. I'm a little confused by your tactics.
Yeah. Oh, man. What is that? what does the one guy say? Don't put that evil on me, Ricky Bobby. Don't do it. Guys, we're big Shake and Bake fans here. If you like Ricky Bobby, let us know in the comments below. Shake and Bake, baby. Okay, so we asked about the bubble, and you touched on it just a little bit there, but interest rates have affected the market, right? It's all sunshine and dandelions over here, correct?
No, but there are great options out there for folks that, are willing to get off the couch. 4 or 5 months ago, there was no chance you were going to get a seller concession, period. Wasn't going to happen. Mm-hmm. Personally, 100%. I was shopping in this market, and, I was offering 80, 90 grand above, and I wasn't even in the running, even offering to pay appraisal gaps. And I pray on my stars, thank you, that I did not win, because that would have been an immediate hit to the system versus a little bit of a rise in your payment. Now, there are options out there, especially for when we do get some relief. And what I mean by normal market, I guess I shouldn't cast that whole web on the whole real estate market, but at least on the mortgage side, when you look at a $500,000 house, that as a buyer, you can kind of know what my payment's going to kind of look like. That's been completely out of realm lately. I mean, I've had pre-approvals that were good to go 90 days ago. Kane, what's the payment on this? Oh my gosh. But there are things that you can do that you could not have done then. And that's why I kind of wish that I was shopping now versus when I purchased in June. And here's the reason why. Right now, you can get seller concessions that allow you to do what's called a 2-1 buy down. A 2-1 buy down is where the seller helps you with closing costs and discount points. So say it's a $500,000 house, you offer $500. Say, I agree with your price. I'm going to give you $500, but I need $12,000 back. So you could use that toward discount points or a 2-1 buy down that could buy you a year to two of a much discounted rate. So that could make that payment very similar to what we could have had when everyone else was paying 90 to 100 grand over asking. Yep. So now you've got a house at a good price and at an affordable payment. And when rates do dip again and things get crazy, everyone's in the front yards fighting over pitchforks over homes, you've got your home and you refi it. And you just built yourself some equity, and it's a very good financial move. And that's where I'm feeling like, and I've had a lot of advisors say that when there's a fire, you should be the one running in. And it's tough to do that. I mean, you're dealing with what you all worked hard for, your personal finance, to achieve this goal of home ownership. And you just don't know who or what to trust. But it just blows my mind that just 4 months ago, no one would blink an eye about spending 90 grand too much for a house. That wasn't worth it, and covering a big appraisal gap. Mm-hmm. But the second you have a 30-year fixed that's above tolerance, oh my gosh, the world is ending.
Yeah, and I think that's something really important too, is like, so last year you didn't have the option of homes to look at, right? So if you wanted the house, you pretty much had to put an offer in that day and pretty much waive a good bit of, the contingencies that you'd have in a normal market, right? So your inspection contingency, you saw a lot of people waiving those. And without that appraisal contingency, if that $500,000 house came in at $450,000, then guess who's coming up with that difference of that $50,000? In that scenario last year, the buyer was. So they're coming 50 grand out of pocket, plus their down payment, plus their closing costs. Now, come back to this market today, the opportunity for a buyer today is they can offer the asking price, yeah, but they can negotiate the seller down. Maybe the purchase price is the same, but they contribute closing costs and maybe buy down the rate a little bit. And you're in the house that you actually want. You weren't forced to make a decision in 24 hours. You could take a look at 5, 10, a couple of houses. I actually had, for the first time this year, I had a buyer said, I'm going to wait the weekend, see what happens. And for me, it was like, I was out with them. I was like, you should do that. You should wait, because you have the time. This isn't a fire sale. So it gives you the ability to actually weigh your options a little bit. But on top of that, you keep some you keep some money in your pocket. And guys, if you have watched my live streams, you know that if I say on top of that, you leave me a comment below on top of that. Thank you so much for being here every Wednesday at 8 p.m. But yeah, so on top of that, you're keeping more money in your pocket today. And the one thing that we've talked about is, okay, so if you're buying a $500,000 house, I mean, how much is closing costs on $500,000 house?
I mean, you can, depending on the zip code, taxes, insurance, everything else, I mean, it can be a decent chunk of change. So 10, 12, 15, 16, you know.
So what could you do with that $10,000, $12,000, $15,000 today that might be more beneficial for you? Whereas last year you were paying that out of pocket, and that's, you know, that was how the market was. The seller wasn't giving any concessions. Mm-hmm. Now you can actually ask a seller, hey, I want a rate buy down. I want you to pay some of my closing costs. Oh, and then all this stuff on the inspection report that came up, we want you to take care of that too. Last year, the seller was like, hey, go kick rocks, buddy. You know, like, get out of here. Like, you're not serious if you want me to fix a doorknob. Like, get out of here. So it's definitely the temperament of buyers and sellers has changed. That doesn't mean that sellers and how they've listed their prices, how they view values in their homes has changed, though, right? So, Kane, what do you think are the opportunities for a buyer in this market?
I think there's tons, especially from a holistic approach, not only on getting a good purchase, but also maybe even taking this opportunity to get other personal finances situated. For instance, the example you just gave, if you would have bought this $500,000 house 6 months ago and you would have paid 70 above asking, then you saved up your 15 grand of closing costs, and you got your, hey, Kane, can we just do 5% down? Because I got to cover a big gap. So there's roughly almost over six figures over here that are just at play. If you were to go in today's market, you go buy that $500,000 house, you put your 5% down. Maybe you ask that seller, hey, give me 10, 12, 15 grand, either cover my closing costs or do a 2-1 buy down, get the payment where it would have been very nice. Yep. It appraises exactly where it is. But here's another piece to that. That 70 grand you would have spent that you might have cashed out from your other property or in an investment that you were already planning, you know, with your chamber hot, ready to go 6 months ago, pay something else off. You know, even if you set yourself on don't doing a 2-1 buy down and you're still at 7%, that 70, 80 other grand that you might have, pay off a truck, pay off student loans, pay off credit cards, pay off this, that, invest it.
Yep.
There's so many better things that you can do to either lower how much money is going out of your household, or you could take that money and put it to something that's making you more money. Versus the box that we were in 6 months ago, the seller pretty much made the rules. Mm-hmm. And that all stems from the inventory that Thomas has always demonstrated. But again, when we get that fryer cooking again, I really do feel that we're going to be in a similar boat again. And we're going to look back at these 3-4 months when everyone else thought it was depressing and sad. You know, it could be a great opportunity.
Now, I just want to get on here, remind you guys, I see we got 11 people on here. Thank you so much for being here. Appreciate you. We're here every Wednesday at 8 p.m. Well, just myself. I'll invite Kane too sometimes, just so we can go over everything. So if you have any questions for myself, for Kane, we're here live. We're answering these questions. This is no bullshit, guys. This is everything. This is what we talk about every single day. We're here for you guys. Any information you need, let us know in the comments below. It looks like I have a comment. Let me just double check. Make sure we got here. Oh, man, we got John in the house. All the good Ponte Beach or beach house sellers are just sitting on their eggs like a big hen, zero motivation. So John is actually looking for a beach house, $1 million beach house with me. And, you know, we have a couple of items, a couple of things that we want to get knocked out before he makes the total move. But John's sitting cash right now, and he's looking to make a move. He's just waiting for the right opportunity to jump in. So, John, hey, you know, you got cash. You might have a little more leverage today. I'll have to find out about that one for sale by owner property we were talking about. We got Michael here. Let's see. Michael, let's go. Michael, what's the best way to get a price value of a property before you list it? So I guess that's more of a question for me. You can, of course, use Zillow's estimate if you want. You're feeling pretty lazy. But if you're looking to actually list your property, sit down with the real estate professional in your area. If it's not in this area, let me know. I can get you hooked up with someone, but sit down with them. It's going to be free for you. They're going to give you the information, and maybe interview, unless you're interviewing me, interview 3 different people just so you have a good idea, good bit of information, on what your home value is. But I definitely think with how the market is going, you want to have someone they have their finger on the pulse. They know what's going on. They're looking at the market stats every day. They're having conversations like this. So guys, thank you so much for the questions. We're going to get right back into the questions in a little bit. So if you have them, fire them off as you think of them. Because if you're thinking, oh, maybe this is a dumb question, they have the exact same questions, guys. And this is it's helping me help other people, and it's helping other people as well. So fire them off. Listen to John. If you guys are watching, smash that like button. If I say on top of that, let me know in the comments, because I do it. John, you're the man. I hope all is well. But let's hop right back into what we were talking about. Now, Kane, I know neither of us have a crystal ball, and if we did, we wouldn't be on a beach together probably somewhere, maybe with our wives somewhere, but we'd be having a margarita laughing about what's going on. So I know we've talked about the scenario before of what we personally think could happen here. Could you just elaborate a little bit on, best case scenario, if rates do go down, how that's going to look for our market here?
So the affordability, when you increase it, you have so many more people fighting over the same homes again, because now you're bringing back a lot more budgets into the field. There's been a lot of my clients that have been priced out. That $500,000, $600,000 was doable 6 months ago. It's not doable now unless the seller plays, and at least that the market is shifting to the point where sellers are starting to soften up a little bit and helping. So when things become more affordable, I think these sellers are going to start being a little firmer, because they're going to have more people in their front yard. Open houses are going to be a lot busier. Do I feel like it's going to get back to the way it was from COVID? Because COVID kind of caused this as well. You had that 3-month backlog of people not buying. They're scared to look at homes, and then all of a sudden explosion. So I kind of feel like that could happen, because we've created this fear factor over the rates. It's a shock to the system. It really is. And then when you're hearing about all these other things, we're also in an election period. Russia's doing crazy stuff. There's a lot of turbulence, and turbulence causes what? You sit still.
Yep.
And as
indecision.
People, yep. And as time, goes on, whether we get used to the interest rates, that way, again, if I'd have told you, hey, Thomas, rates are 5.75 a year ago, you'd have been like, what? Yeah. This is insane.
For sure.
That's crazy. But if I told you that now, or if I called 90 of my pre-approvals and said, hey,
we got 20 people we could call right now.
Prices just dropped. Yeah,
so
and guess what? How many people that were on the fence on selling their house?
Funny.
Now we should. And that's just in me and yours little
world. Yeah.
You take that times 1,000 in this market.
Mm-hmm.
Yeah, it's really quick on how we get back that chart where, okay, we're out of inventory again.
Yeah. So let me outline a little bit of what we've talked about as, obviously I'm a salesperson. That's what I'm here to do, guys, right? He's a loan officer. He's here to sell mortgages. So this is our job. This is what we do. But if the scenario of mortgage rates come down in the next year, which during a recession, mortgage rates typically do go down, today could be the perfect time to buy, right? Because you can negotiate so much cash to keep in your pocket versus your closing costs, maybe the rate buy down, whatever that is. And then if mortgage rates go back down, then we're going to see a spike again, right? So if let's take a look at the inventory here, just to give you an idea. In this perfect scenario for a buyer today, let's see. So we're looking at the past 2 years where we knew where rates are right here, right? And we're at our inventory of 1.1. So let's see, we've had rates increase this entire year. So January, we had one, we were under one for a little bit. The beginning of the year, now we're at 1.2. We're all the way up at 2.7 here in September. And let's say interest rates went from 3.5% to 7.5% in that time. Is that fair? So if interest rates go back down, do you think we're going to see a reverse of this inventory in our market? Now, that's an open-ended question for you guys there on the other end, because we're showing you the data here. And for the most part, the drive in our market was interest rates and people relocating, right? But we haven't seen this market, this inventory here is starting to level off, it looks like. So if interest rates go back down, does that create a feeding frenzy? What do you guys think? Let me know in the comments below. If you have any other questions about what's going on here in today's market, let us know in the comments. We're here for you every Wednesday at 8 p.m. Kane won't be here. I'll be here to help, though. If you have questions, I can always get you Kane's information. So if you do have questions about lending, about rates, about the market, about a housing bubble, let us know in the comments below. We only have a couple more questions. He's got to get home to his wife and kids. So I got to let him go here shortly, okay? What do you want, Bubs? All right, so we kind of gave an idea of what a buyer was going to do in this scenario, and I want you to touch on just a little bit of your personal story of what happened last year, and also what you and your wife are arguing about today. I know it's a little personal, but I think this is important because real estate is a personal business. People buy and sell because, one, they need to live a place, and they have a family growing, their family's getting smaller. Life, death, taxes. That's why people are buying and selling. So just give us a little idea of what, how you entered the market here.
Sure.
And what you're looking at today.
Yeah. So it's been on my radar to move down here. And a lot of the locals are probably like, oh, no, more of you. I'm from Indiana. So when Indy, yes. So wife and I moved down here, and it's been on our game plan to move, to buy down here. We got a townhome in Shearwater, great area, North St. John's, and we used that as our base until we could find something that would suit our needs. We found a lot of homes that we would love to have bought, and luckily, ideally, with the market that it was, that we did all right on the house that we had up in Indiana. So I felt like we're gonna have to offer. I mean, I'm living it. I'm seeing it. I'm seeing my buyers, my pre-approvals just getting their butts kicked, sadly. And so I was the proponent of going out guns blazing to, a lot of these homes. As soon as they hit, even sight unseen, I'd be all like 50 grand above, 60 grand above. I'll cover appraisal gap. And I wasn't even in the conversation to win. And it just blew my mind. And so I should have probably just chilled out, but hindsight is always 20/20. But I did find a property and I settled. I really did. It wasn't exactly what we wanted. Mm-hmm. It was a fair deal. It was a pretty big downgrade from what I had in Indiana, and a big downgrade from the houses that I was offering on. Is it the end of the world? No, but it just paints a picture now that I would love to have been out shopping right now. It's got me having that discussion with the wife on the argument where
discussion is a good word.
We are not packing stuff all back up again and getting the kids, all their stuff. Kids have lots of toys, by the way. And those conversations are kind of tough to have. And I did make that mistake. We did get a good interest rate, but I didn't get the house that I wanted. I think I got an okay deal, but I could probably get a pretty good deal right now and buy exactly what I would have wanted, and probably had the same monthly payment, at least for a couple of years, with a buy down. And everything would probably have been right in the world. But hindsight's always 20/20, and that's why I kind of want you to learn from me. And there might be people on here that made the same mistake. But I would love, and that's the truth. I would love to go back to some of those neighborhoods that I lost on and knock on the door now, and see where we'd be.
It's a little bit of a different world now too, you know, with the interest rates. It has sellers, you know, they're not blind to the news, you know, buyers as well. Buyers are seeing it and they're like, maybe I should hold off. But then we also have that special pocket of buyers too who were getting their ass kicked these past 2 years.
Yeah.
And they're like, I'm in, let's go.
Yeah.
Let's go. So I think, like, you know, having that story, thank you so much. It definitely humanizes us, right? Like, he's got a family, he's got, you know, he needed to buy a house at a certain time because he has a family, but necessarily, like, with what's going on with what he came from in Indiana, what, a 3,500 square foot house? Something like that.
Yeah.
And he's down to around 2,000?
Like 1950.
1950, you know, but he's closer to the beach. So you got to make some sacrifices. And now he's thinking, you know, maybe they're getting the itch to maybe move again. And that's with the market conditions going on today. So, and he's in the market. He understands what's going on. But guys, we're here every Wednesday at 8 p.m. If you have any questions, let us know in the comments below. I think I'm almost out of questions, unless, Kane, you have any questions for me, man? I don't know. I think I got to let this guy get out of here. You know, I've taken up too much of his time already. But be on the lookout. If you have any questions for him, you can reach out to him directly. I'll put his contact information in the details below, but also Instagram. You got, just like this, High Velocity Home Loans with the underscores and everything. We're doing some really cool things here in the community, guys. So go ahead, give him a follow, give him a like. He's also got a YouTube channel coming out. I'm putting it live on here now. I'm making him do it. So we're going to have more stuff like this coming to you guys in the future. So looks like we're not getting any questions here. But Michael, John, I appreciate both you guys and your questions. And like I said, we'll be here every Wednesday at 8 p.m. If you have any questions, any further information you're looking for, tune in every Wednesday at 8 p.m. Thank you so much, guys.